Okay, great. So I will start again here. So welcome to the live online webinar. We are looking at the daily bars to do our market analysis today, and the webinar is using daily bars to make money in forex trading. My name is Raman Gill, and I'm the founder of tradingwithvenus.com website. So in today's training, we'll take a look at again, how do we use our daily bars to get better handle on the market? How do we use the daily bars to find the direction of the market? Okay, there we go. Sorry, I was getting some feedback here. All right, so we'll look at how do we, like I mentioned, how do we use the daily candlestick bars in our daily in our technical analysis. I will share a simple trading strategy that is based on the daily bars that you can use to actually take trades using this. And then we'll also take a look at how do we properly implement this strategy. And then one step that I can suggest that most traders miss when they do this, or when they do their trading, we'll take a look at that as well. To start things off, just a little disclaimer: I am not an investment advisor. I am not licensed to provide investment advice. This is all for teaching purposes or educational purposes. If you need any specific advice on your individual investing needs, please do go see a licensed investment advisor. Okay, so a little bit about myself. Like I said, my name is Raman. I have been trading Forex for the last 7 years. I got into it because a friend of mine suggested, or she was trading and she was just so excited about it. I kind of found out about it because she mentioned it, and since then I started looking at the markets. I was very interested. And since then, I've gone and taken a lot of courses. I started trading full time about 5 years ago, and I've been profitable. I was profitable, I have to say, since the beginning, because I used to put a lot of time and effort into it. But when I started trading full time, I found my mental, my psychology really kind of messed me up. I wasn't able to properly manage my trades. I think that was the biggest challenge I had. I was making lots of money. I was profitable. However, I wasn't able to hold on to my profits. I would do a lot of up and down. I would make profits. I would lose some. I would make some more. So there was a bit of a roller coaster. I was stressed out, and I was doing a lot of basically back and forth in my trading. So I went and looked for other successful traders that were actually doing this successfully and making money in trading, and I found it was difficult. So during that time, I went on, because I wasn't sure what was going on in my trading. So I went on this quest of learning. I did a lot of different things. Looked at a lot of different strategies, basically tried everything, tested everything. And in the end, what I learned was that as a trader, you need to become an independent trader. You need to find something that works for you, something that suits your personality, something that you can apply. It doesn't matter what somebody else is doing or how well they are doing. It has to be something that you can fit to your personality and the time of the day that you trade, the type of trader you are, whether you are a short-term trader or a long-term trader, what sessions you're trading, that sort of thing. So anything that I share with you today, I suggest take a look at it, test it out, try it yourself for a few days, few weeks, and then see how you can use that information within your trading style, within the strategy that you're using. In terms of my background, I have 2 MBAs, one from Cornell University in the US. It's an Ivy League school, and then another one in Queen's University here in Canada. I have, prior to that, my undergrad was in computer systems, bachelor's in technology. I have experience in banking and financial industry. I actually work in financial industry right now. And I have been an entrepreneur. I had IT consulting company for 10 years. The reason I trade is it's really because I want more freedom. I like making money. I do make good money, and but I want more freedom in my life, and that's what I'm really working on right now, is to create that freedom for myself and my family as well. I have two beautiful children, and that's what I want to spend more time with. So another thing I suggest is when you're trading, understand why you're trading. If you are just in it for the money, it's not as much fun. I have gone through periods where I was literally sleeping with my laptop beside my bed, and it's not fun. So approach trading as with your right goals in mind. If you have passion for it, you will actually do quite well, because you will be willing to interact with the market. You'll be willing to do the things that most people are not willing to do, and that's really how you succeed in this market. So I have doubled my accounts, I've quadrupled and 10x my accounts. That's not the most important thing. The most important thing is, what are the things that you do day in, day out, and that's what will get you results. So that's why I'm going to share the one thing that I feel has really helped me. It was something that two of my friends shared with me, and I would like to share that with you as well. So that's the daily bar analysis. So let's look at what I'm talking about. Most people, when it comes to daily charts, they think it's for longer term traders. They think you only look at daily charts if you're swing trading, or if you're wanting to get into longer term trades, hold the trade for several days or several weeks. I have found that that's not always the case. You can use your daily charts for actually just doing intraday trading. I don't normally hold my trades for days on end. I enjoy intraday trading. I like looking at charts, interacting with the markets daily, and that's what I do. However, I found the daily bars, or looking at a daily chart at the end of my day, that's a practice I follow every single day. At the end of my day, I look at the daily candle close, and based on the daily chart, I look at, I come up with a direction or my bias for the following day. So that's how I'm using daily bars. Again, it helps you find market direction for the following day. So we're only looking at market direction for the following day. We're not looking at market direction overall, like for a week or month. We are just looking at market direction for the next day. So if you know which direction, or you have a good indication of which direction the market will go the following day, it becomes easier to take trades. All right, so let's take a look at how would you enter trades based on your daily chart. So what I'll do is I'll switch on to the charts, and we'll do the bar by bar analysis. However, before we go do that, I just want to cover how you would, based on your daily bars, how would you enter into trades. So essentially what you're looking for is at the end of your New York close, which is at 5 p.m. Eastern. So anytime after 5 p.m. Eastern, you would take a look, go to your chart, go to your daily chart, and see how the candle is closing. So based on how the candle is closed, you come up with a bias for the next day, right? So when in order to get into trades, I suggest you draw your support and resistance line, and figure out where those good areas are in terms of your support and resistance, where the market has a potential to set up for a trade to set up. So you mark your support and resistance levels on your chart, and then you wait for a pullback in the opposite direction that you're expecting the price to go to. So for example, we are looking at this, let's look at this candle here. This is a very strong up candle. Now, for the following day, I would expect, based on this, I would expect the direction to be upside. Well, actually, guys, if you are on the line, can you please mute yourself? I can hear someone in the background. Okay, perfect. All right, thank you. Okay, so you mark your support and resistance, then you wait for the pullback. So in this case here, for example, this is a major, this point here is a swing high. So that would form a major support and resistance area. So my first expectation would be for the price to come and test that level again. And so here, as you see, the price comes back and tests the top. So this support and resistance level, which is marked by our swing high here, it will come back and test the level, and then the price moves up. So that's what we're looking for. We are using the support and resistance levels for the level where the price will pull back to. So that pullback will be in the opposite direction of our bias in terms of the direction for the following day. And then we go on to a lower time frame. So you can go on to your 15-minute chart or your 5-minute chart and wait for trade to set up. And when I say waiting for trade to set up, you're essentially looking for a reversal pattern at that particular support and resistance area. And I'll cover that on the charts, but just to kind of give you an overview. Okay, I am still hearing someone. Can you guys mute yourself, please, if you're on the line? All right, thank you. So so then we look at reversal patterns on the lower time frame, and based on those reversal patterns, we enter the trade in the direction that we are biased in. Okay, so let's go on to our charts and see how this plays out on the charts themselves. So I am looking at, actually, let's start with our euro here. Okay, let me get rid of this. So on my chart here, I have a lot of, I've marked my support and resistance areas, and this is on the daily chart. So these support and resistance areas are quite good. And the way I just put the support and resistance areas are really, I'm just looking for where the price is reacting. And I look for those levels that the price has reacted at multiple times. So in this chart here, we have, this is our euro, US dollar daily chart. And so let's take a look at very recent price action. We have seen, we had, right now we are sitting in a bit of a range here. It's quite a wide range, but we have been in this range. So right here, so this is the high and this is the low. We have, the price has been moving around within this range. It's not quite that narrow, so we can still use it. Okay, I am, whoever's on, can you guys please mute yourself? Okay, I'm hearing someone in the background. All right, there we go. Okay, so based on this here, so based on this, on the Euro US dollar chart, so we have a nice strong candle here to the downside, and then what we see is that it's coming into the support and resistance area. So we know the price has reacted before at this level. It's a nice strong candle. So based on this red candle, I would expect the price to pull back up and then go to the downside. And so as we can see here, the price pulled to the previous, just above the previous support and resistance area here, right into the body of this candle. And that's kind of what we're looking for. Generally, when we have a big candle like this, I would look for a pullback of about 50%. Normally you get 50% pullback, and sometimes it may be slightly higher. So just keep an eye on that. So that's why we need to go to the lower time frame to see how the price is reacting. If you see strong momentum in the price, don't take a trade in the opposite direction of that. Wait for the price to exhaust itself and then enter into the trade short. So basically you'd be looking for a trade not down here, but up here somewhere. So this support and resistance line that you have drawn, that I have drawn here is 109.24. So I'd be looking for price to come into the support and resistance area and then show me a trade setup. So normally I would expect to see a reversal pattern, like for example, a double top there. That could be one reversal pattern that I may be looking at. I may be looking at an evening star pattern or railroad tracks. So something that shows me that the market is exhausting itself and wants to turn at that point. Because something, and if you don't look for that, what could happen is price could pull back more, um, and then come down in that case. So if you trade a trade too soon, you will actually miss that opportunity to actually enter at the right direction. So you want to wait for price to show itself, and then take the trade. So essentially, in reading the candles, we are looking at how the candle is. In this case, we see a wick to the top side, and then we see a strong body and a strong close to the bottom here. This is what we are looking for in a candle. We're looking for the direction of the wick, which means wherever the wick is, that's where the price is getting rejected from. So in this case, the buyers came in, tried to push the price up high, and then it got pushed down with a lot of force. So this candle is a very bearish candle. So we are reading each candle individually to look at how the price is behaving. And we also want to look at the candle before this previous candle, the one before that. And in this case, we see that the price went and tested this support and resistance area, a 109.96, I would say 110 here, and then got rejected, got pushed down. So these two candles combined tell us that the following day we'll probably see another move to the downside. So you're looking for a pullback, and then you enter into your trade into a short trade based on this. And as we can see, there were 90 pips. The candle itself is 90 pips. And there you can find your 40, 50 pips, whatever you're looking for the day. You have the opportunity to take that in the direction that you're expecting. So that's just the bias. So once your trade is done, once the market has moved to the short side, it doesn't matter where it goes after that. So as we can see here, the price closed up in a bit of a bullish pattern here. We see a green candle, and that's okay. Just like price, this happened on, when was this? On Friday. As we can see, we got a push down and the price moved back up. If you've made your 40, 50 pips in here, who cares what happens to the price after? So don't worry about that. As long as you get your trade in the direction that you're expecting the price to move to, that's the important thing, that you get your trade in. And whatever happens after, it doesn't matter. Like, if you can still take the trade, however, it's not important. And I would actually say stay out of that, because the more trades you take, the more opportunity you have of giving your money back. So that's one type of setup. So now let's take a look at the next day. So the next day we see the price go up, price comes down, and the price gets rejected. It gets pushed back up. And if you look at this candle here, it's a green candle, and a lot of times, this one doesn't matter. The color of the candle may not matter in this instance, because we see a wick to the upside and we see a wick to the downside, which makes this a spinner candle. So we are looking at candlestick patterns here, but within the larger context. So based on this candle, I would be open to the direction, to either direction for the market the next day. So that's where, when you have a candle like this, you really need to wait to see what the market is showing you. And sometimes it may be better to just move on to a different chart and maybe pick another currency pair that gives you a stronger directional bias, as opposed to trying to find trades or forcing trades when you don't have a strong bias for the market direction. So that's your call. You can wait for a trade setup on a shorter time frame, or you can just go look at another chart, maybe dollar CAD or dollar Swiss, whatever you're trading. Maybe go look at another chart that may have a stronger candle like this, or a stronger up candle, whatever the case is, and just leave the one where you do not have a directional bias alone. So this candle here, because there are wicks to the top, wicks to the bottom, small candle body, it is neutral in terms of the daily bias. And we're only looking at the daily bias. So I would be neutral in this direction, because I feel like sellers tried to push the price down, and buyers came in and pushed the price up. And at this point, buyers have actually managed to close it to the upside. However, they did get rejected up the top, so it's very neutral. So, okay, so we come to the next day. So the next day we see the price comes and tests the bottom here, this support and resistance area. And when I say look at your 5-minute chart, basically what you're looking for is, let's say, look at a 5-minute chart. This is a very nice pattern. I really like the way this looks. And the reason is, so this is the kind of setup you'd be looking for. So you would have your support and resistance level marked here. And then you go to your 5-minute chart. As the price is approaching this level, your support and resistance area, you go on your 5-minute chart. So this is not the exact right one, but I'm just giving an example. So let's say your support and resistance area was somewhere around here. So you go and see how the price is reacting at that level. So here we see that the price comes down and throws a big, huge pin. That means sellers came in and buyers just weren't, or sorry, sellers weren't able, buyers came in and sellers weren't able to hold the price down there. And then we see another push down and it gets rejected right away. And third push down and it gets rejected right away. See, this candle here is a very strong bullish close to the candle. And that's when you'll be looking for any kind of a retracement off of this to enter the trade. And you can put your stop below this level, give it a few pips, put it below this level, and then you can try a trade to the upside. So that's what you're looking for in terms of entering the trade. You go do your directional bias on the day, find the support and resistance area that you're expecting the pullback to happen at, and then watch your 5-minute chart. I like the 5-minute chart because it shows you as the candles are forming, it shows you how they're forming. And in this case, there's rejection here, price comes down very, very strong and it gets pushed back up again. Price comes down again and gets pushed back here. So once you have this candle here, this is a good setup to enter on because this is reversal. There's just buyers coming in and they're not willing to let the sellers push the price lower. So this, after this bar, just wait for a bit of a pullback and enter. And as you can see, after you entered, price came slightly below where you had entry, so where you had entered the trade. So, and that can happen, which is very normal for it to happen. However, it never comes back to where your stop is. Your stop is is below these rejection levels, and it never hits your stop. So you may be a few pips in the negative to begin with, and then momentum comes in and you go up. So that's how you take a trade in this kind of scenario. So let's go back to our daily analysis again. So the following day, we see the price move back up. So here we see there are pins on both sides, but this now has given me a directional bias. So I see price was moving down, and then we come and see an indecision spinner neutral candle that is more neutral. We don't know which direction it's going in. And after that, we see push to the upside. We see a big pin to the bottom, which suggests that buyers are coming back in control. The bids have come into the market and price is getting pushed to the upside. So in this case, I would be more bullish on this. So again, you're looking at the candle itself. So once this candle closes, I'd be bullish on this candle. Right? So basically what you're looking at is the candle itself and the previous candle to make your decision. So we had previous candles were going down, then we had a neutral candle and then push to the upside. So now we become bullish. So essentially we'd be looking for a move to the downside and then a move to the upside, and which is what we get. So in this case, we had on Friday, we had news ADP non-farm payroll, which is always a big event. We had the payroll data come out, and that becomes that pushed the price further than I would have expected for it to go to. And that's why it's important to watch how the price is reacting. So let's see here, the level that I have marked is 1.087. And here, 1.087, let me just move my 1.087 right here, 7.1. So that's where I had marked my support and resistance level. So if I see price, so once this happens, I'm interested in taking the trade, but I don't enter the trade right at that point. I wait. So I see this candle and I think to myself, well, price could be going lower. So I sit back. I don't actually enter the trade at this point. And if this continues, you don't want to do that. You don't want to be in front of price when it's just dropping. You don't want to be in front of a falling knife. So don't try to do that. Just wait and see how price reacts. So this is the 1.07 is the level we had marked on our daily chart. We marked the same level here, and then we watch how price reacts at this level. And the price comes down here, tries to push through our 70 level. It tries to push through our 70 level, it gets rejected, and then tries to push to the 70 level and gets rejected. And that's how, so you enter the trade here at your support and resistance level. There are two different things. One, it was your support and resistance from a daily chart. And secondly, we see multiple pins into the level at this level. And then we see a strong candle close to the upside, very bullish candle close, and that gives us confirmation that we can enter the trade at this point. So we enter the trade and put the stop down here, and as you can see, if you wanted your 40 or 50 pips in the trade, you had 80, even like it went for 100 pips, but even if you got out somewhere in here, you would still have like 64, 65 pips. So you could just put your 40 or 50 pips, take profit, and it would have been hit. And in terms of, actually, let's take a look at what your, if you enter this somewhere in here, so you're looking at about 20 pip stop loss, and you're looking at about, there's 80 pips, but let's say you entered in here. So you're getting your better than 2-to-1 risk to reward ratio. So this is how we use the daily chart to get into trades. So now let's look at some more patterns, and let's look at some more candles on how to do our directional bias. So for example, so now we are on a Sunday. We saw this candle close on Friday. So what does this candle tell us? Let's take a look. So we have sellers trying to push the price lower, and then it gets rejected. See how strongly the strength that came into this. So this here, we have small wick to the upside, a huge wick to the downside. So this is a very bullish candle. So I would expect the price to come down at some, so we'll have to see, because it's so, one thing that you want to pay attention to is the way the price moves. So right here, it was a very inefficient move, which means the price just blew through everything. And then even here, the price was quite inefficient. It just blew through these levels. So there was no buying or selling activity all the way up to the top here, really. And then we saw, red and green candles. So we saw transactions on both sides of the market. However, coming down, there were no buyers. There was just selling action. And when going up, there was no selling. There's hardly any selling. If you see small, and see how price jumps, this just means this very inefficient move. So price, right here, this support and resistance area, some sellers came in, but they could barely hold. And this is a 5-minute chart. So this shows how strongly the price was moving till it got to this point, this 109.50 support and resistance area. And then we started seeing activity on both sides of the market. So this means that the price is very inefficient, which means we could have a deeper pullback on Monday. So that's what we would be watching for. So my directional bias based on this candle would be to the upside. However, I would wait for a pullback and see where the price pulls back to. And this is where, so it may just pull back to this 109.20 level. And it may give us a trade setup, something like this, or slightly different reversal pattern, essentially, any kind of reversal pattern. And then we would be looking to the long side, or we could just, or wait and see where the price pulls back to, because there may be, when you go on your smaller time frame, there may be other support and resistance areas that the price may go test. But my first option in terms of where I would expect the price to pull back to would be 109.20. That will be my first place I would be looking for a pullback. However, sometimes what could happen is price may not pull back that much. It may just go to the top of this candle right here, slightly higher right here, which is 109 around 40-ish, 44. So it could just go down up here, but I would expect it to come down to this 109.20. I will like that trade better if it does come down here. However, if all it wants to do is just go there, and that's fine too, because we're looking for a reversal pattern. We're just, whichever level the price sets up at, if it sets up at this 0950 level and gives me reversal patterns here, I will take that. But I think this one, the 09 around here, I think that's where we were looking at the 40, the top of this candle essentially. So let me just take a look again. 44. So you may just pull back to the 44. However, we could expect a deeper pullback. So that's one. So that's my directional bias for this coming Monday. So this is live charts. So now let's take a look at some other candles. For example, let's take a look here. So how would you read these candles? Let me walk you through that. So here we have a strong bullish candle. So I am not bullish on this candle, even though it's a strong uptrend. I'm not that bullish on this, because I feel the reason I'm not is because I look at this. Okay, a lot of buyers came in. There was a lot of activity to the upside, but then it runs into this support and resistance area. So if you take a look here, see here how we have pins into this level, and then price had struggled before it went to test the next level. So this is a strong support and resistance area. So it just goes and stops right there. It is also 1.1200. So this 1200 is a psychological level on the euro. So that's another reason where and it gets rejected at this level. So that's another reason where I won't be so bullish. Had it closed above this, I would have been more bullish on this. But I see a big wick at the top. Even though the candle body is really strong, there's a big rejection at the top. So I would actually be bearish on this, because I would expect the price to go and test this level here. And then actually 1200, I'm at 112.08. So I would expect it to go test the 1200 level. And actually, as we can see, it came very, very close to the 1200. So this will probably be, we're looking at like 99. So as you can see, 1199 is where the price went to test. So that's what I would expect. It closed here, but I would expect it to go test the level again, because we're looking for a pullback. I'm biased to the short side on this because of this long wick. So I would expect the price to come to test the 1200, and it came to 99, so close enough. And I would be looking for a reversal pattern on my 5-minute chart at this level. And as soon as I start seeing any kind of reversal pattern, pins and other things like that, I would start becoming interested in that trade. And once the pattern completes, I would enter the trade. So I would be biased to the short side. And then we see this strong, big, strong candle here. On this candle, I'm biased to the short side, and the reason is, one, because there's big rejection up top here. Price just drops. So it's a very bearish close. There's hardly any pin at the bottom. It's mostly up on the top here. So we see price rejection to the downside, very strong bearish close. This red candle here takes out the green candle, and it closes below this green candle. So I am biased to the short here. So the following day, I will look for a pullback, and I will be looking for a pullback at a support and resistance area. So here I have marked my this 1120 area. So that would be my first place I'd be looking for a pullback to. It doesn't quite get there. It gets into this support and resistance area. That's why I like to mark the internal support and resistance areas, because sometimes it may just get to that. So I'd be looking for, first would be this 1120 area, and then I'd be looking into this area for support and resistance. The price doesn't quite get there, so that's why we need to watch the price, and it only gets to the 1080 level. Now, in terms of your support and resistance area, I'm not sure if you guys know this, but your 0 levels are very important. Your 80, your 50, and 20 levels, these are natural support and resistance areas that price will normally react at. So if I have price, I'm looking at price to react at the 0 level, sometimes it will only get to the 80 level. So do keep that in mind. Sometimes so your zeros, 80s, 50, and 20, these are natural support and resistance areas, and you want to pay attention to how price reacts in those areas. So here we see price only got to the 82 mark, and then it dropped. So I was biased to the downside on this, so I wait for a pullback, and then as you can see, the price dropped. So you're able to get your pips out of this. Right, so you got 100 and 112 pips, so you could have gotten your 40, 50, whatever you want out of that trade. So this was good. So we have bearish candle, bearish candle. In this one, I am still biased to the short side, even though this is a spinner, because there's a long wick to the upside. And the candle before that was bearish as well, and then we had a reversal before that. See how we have the two wicks here, so that's a very bearish kind of stance. So our market hasn't shown me any kind of upside at this point, so I would still be looking for a bearish day the following day, even though this would be considered a spinner when you look at candlesticks patterns. I am still biased to the downside. Okay, so the following day we look for a pullback, and as I said, sometimes the pullback will come to the candle bodies right here. So this is where it came down to, and it is so at 1036. So that would be, so I like to mark the candle bodies, like I said here. Sometimes you may just go to the, to these areas. So here it goes to our previous candle body and then drops. So we got a nice, we were biased to the downside, we got a nice close to the downside. And here we see there's a longer wick on the top and a shorter wick to the bottom, which is fine. But this candle is a very short, I'd be biased to the short side based on this candle. It's a very bearish candle. So we see bearish, bearish, bearish. The following day, I will be biased to the bearish, to the short side. So I would expect a pullback. And as I was saying, see how the price will test. So the daily highs and lows are important. So pay attention to them because the price will pull back to those areas. So it pulls back to this daily low, and then it drops. So we were bearish on this day. We wait for a pullback, and the market drops. So we should be able to get our pips out of this trade. And then we come to the following day. This here as well is a very bearish candle. It does have wicks on either side, but they're very small, short wicks. So we are still biased to the short side. So again, we would expect a pullback, and the next day we would expect the market to drop. And again, the market drops. So here's an important thing about this candle close here. Still very bearish, long wick to the top side, and great, really good, strong close in the bottom here. But notice what's starting to happen here. See how we had big body here, and then we had kind of little tiny body in the candle. Then the candle body started increasing in size. And here, this is the first one that we see a decrease in size of the candle body. So you have to be careful with this one because the body's starting to get closer. So we would expect price to start compressing, which could come in the form of smaller candle, smaller candle, smaller candle, or it could sometimes do just this. So here, there are two things happening. One, we would expect a pullback. It pulls back to this nice support and resistance area we had already marked on the chart, and then it drops. So we still have room to take our profit. So this moves 63 pips. So we would still be able to get our profits out of this candle. But this candle closes in a very neutral way. And the reason I'm neutral on this candle and I was bearish on this one, if you look at it, the candles look very similar. This one was, bigger than this one. However, I was biased to the short side on this, but I'm biased to the long side on this because even though we got rejection from the top, see how price is running into this 10800 level? 10800, just like 1200, it's a psychological level. Price had reacted previously. It's our swing low. So we would expect buyers to be sitting at this level. So you have to be mindful of your levels that you're working with. We see how strong a reaction we had. off of this level last time, we saw a reaction of 620 pips, which tells me, or I would expect some buyers or buy orders to be sitting down here. So I would expect a reaction off of this level. So we take our daily candle and we put it into a greater context, a bigger context of what the market is doing and the levels that we are working with. So in here, anytime we come to a swing low, we need to start expecting buyers to come in. So this was a swing low. So we would expect the buyers to come in, and the candle body has compressed a lot. All of a sudden, it went from a long body to a very tiny body at a significant level. That's a psychological level. So the following day, I would be bullish on this candle because of these things. Compressed candle body, swing low, I would expect buyers to come in. And as you can see, we get a huge response the next day. We get a huge response off of this level. And so that's why, that's how you read it. So we looked at bar by bar analysis on daily candles, and now we are back into the bullish side. So now let's take a look at this candle. So we do see a bit of a wick on the upside here, which means some sellers came in and were wanting to push the price down, which is perfect because we are very bullish on this candle. So we would expect the price to push down. And again, we will see how these daily closes are very important. Just like I was talking about, I think we had, so if you look at a couple of previous days, daily closes, pay attention to those. And you'll see a lot of times price will react at where the daily levels are, not closes, or your daily highs and lows. Those are very important. See where the price went to? It went to the previous day's low. So those things are very important. So pay attention to that. Once the price breaks through, pay attention to the previous day high, because a lot of times price will come and test the high there. So price comes and tests the high. We are already long. We are biased to the long side. So there's no need to get into the trade, even though you can, to the short side. But why stress yourself, right? Because we don't know whether the price will react at this level or this level or this level. We don't know that. We have to wait for the market to show us what the price is going to do. So we need to read the chart. We need to watch price action and see where it will reverse. So we don't want to just randomly take trades. We are very, very focused on following a methodology here. And our methodology is we are biased to the long side. So let's look for long trades. So here the price reacts to the previous day high. And you will start seeing pins into this level. You'll start seeing price action on a smaller time frame. That's when you know it's the right time to enter the market. So you enter the market to the long side. You would have gotten your 40 pips, 50 pips, whatever your targets are. You had 90 pips, so there's a lot of room to take your profits. And then the candle closes like this. See how the candle is very similar. However, I'm biased to the upside on this candle. And the reason I'm biased to the upside is because it gets rejected at the strong level, which was a previous support and resistance level. As you can see, this price has reacted at this level here. So it closes, it gets rejected at this. And even though there's a wick and a small body, the big rejection, just like the other candle we looked at, this one, we are biased to the downside because of this long wick and the shorter wick at the bottom. So we are biased to the short side, and here we are biased to the long side because there's a big long wick on the bottom and a little one at the top. So more pressure to the upside. So we would expect an up day. So it closes over here. We would expect it's right into an important support and resistance area. So as we see, the price only comes to test this level here and then pushes to the upside. So that's how we would be looking at reading these candles. And again, based on this one, I don't like the look of this wick. I'm still bullish on this, but I just don't like the look of this wick. So I will wait to see where the price would react to. So my first place where I would look for the price to react to would be this level here. And as we can see, price blows through this level. Because of this wick, I would expect a deeper pullback. So I would wait for the price to, so I would wait before I take a trade. So as you can see, I was looking at this one as the first level and this one as the second level. It goes to the second level for a pullback. And based on this, so we would enter, we would watch here. This is a very important support and resistance area. We watch how price reacts. And based on how the price reacts, we will get into a trade. So again, we will see on our shorter time frame, we will see a reversal pattern being formed right at this level. It's a day low. It's a strong support and resistance area. And then you throw in your reversal pattern that gives you different confluence. And based on that confluence, you can get into your trade with a higher probability of it working out. And we are biased to the upside. So that gives you a lot of confluence at that same point to get into a long trade. And you would get into a long trade. As you can see, it closed up here. So this is a bullish candle, even though in candlestick pattern itself, this is on a standalone. We're not looking at a standalone candle. We're looking at the candle within the bigger context. So I would see this as a bullish candle because sellers came in, tried to push the price down, but they failed. And buyers came in and pushed the price up. So the next day I would again look for, see how price tends to go to the day highs. So pay attention to the previous day's highs and lows. They really work. So as we see, price comes and tests the highs from a couple days ago and then pushes off of that. And we see price going into it's a very bullish day for the price, and it goes up there. So now this is something that actually it's a good point to bring up here. See how price went into this level. This is a very strong support and resistance area. Again, I work a lot with support and resistance, so do pay attention to the support and resistance because it will impact your trading. Okay, so based on this one, I get when I see huge candles like this, it makes me nervous because it's too much momentum in the price. That means somebody got overly excited, and to me, these candles are just like the neutral candles, because sometimes it's just market sentiment that pushes things to one side or the other, and I tend to wait and watch to see how the price will react. So we see price reaction up top here. This is a long wick up here, so I would expect the price to come down. My bias would still be to the upside. However, I'd be more nervous at this point. So I won't just jump into trades because something like this can happen. So you could still get a long trade out of this. However, it's not as good, right? So be mindful of these big strong candles, because like this candle here as well. The reason I was bullish here was because it happened after major support and resistance area, and then we had this kind of candle, and then we had a bullish, so basically a reversal here. And here we are running into major support and resistance area. Price tried to break through this several times, went past it once, and now it's coming to test the same level again. So this level here would have a strong reaction. So we need to wait and see how the price reacts. And then we see the price here becomes this candle here is neutral. It's not at this point because we can't see this. Remember, we can't see this price to the right here. This does not exist at this point. We're only looking at this one here. So we see the price got rejected at the top, price got rejected at the bottom. It makes this very neutral because we don't know which way the price would go, because what could happen is price could just push up to the upside here and go test this level. So this is very neutral. So this would be these couple days would be one of those days where you go look at a different chart that gives you a better setup on your daily and go trade that pair instead of trying to force things in your euro dollar. Had I seen a nice pins to the top here and candle like this, I would be bearish on that. But because there's a little teeny wick to the top, long wick to the bottom, I would be neutral. Okay, so does this make sense? Do you have any questions? All right, doesn't no questions? Sounds good. So hopefully, so that's how basically I use the daily analysis to find the bias for the following day. I look at so this candle here. This is our latest price action. I see rejection to the bottom. I see this as a bullish candle. I would expect the price to pull back either to this level, or I will watch and see where the price will pull back to, and then would expect the price to go to the upside. And my target will be about here, this 110 level. It's a strong level. If it closes above this level, then I'll be even more bullish for the following day. But this one, based on this candle close, I would be bullish on the euro dollar going into Monday. Yeah, so determine stop loss and take profit, just support and resistance levels. I work a lot with support and resistance levels, but normally in terms of my stop loss and take profit, I usually like the 2-to-1 risk to reward ratio. I generally tend to put a 20 pip stop loss. So as we looked in this case, I try to have a 20 pip stop loss, because 20 pips it gives me enough room for the price to go against me. But it's not so big that you're giving up an entire trade. And then my profit target would be about 40 pips. And I would take half of so let's say the price was going up here. Once it gets to 40 pips, you can either just close your trade out, and who cares however much it runs. If it goes 100 pips and you only made 40 pips, the bottom line is you made 40 pips in your pocket. So that's one thing you can do. Or the second thing you can do is take half of your position off at 40 pips and then trail it behind. And then you would maybe somewhere in here you would get out, and then you got 60 pips, 40 pips in half of your trade, 60 pips in the other. So that's another way you can do that as well. But normally I tend to work with 20 to 40. Yeah, so what I do is, so that the 20 pip is a general guideline. Like if my 20 pips falls in here, that's not good. So I put my stop below this level. So I know price has reacted at these levels. I want my stop loss to be below this level. So in that case, and what I try to do is enter. So let's say I was at 25 pips. If I enter, my stop loss was 25 pips. If I entered in here, I would wait for the price to pull down and give me that 20 pips, because it's just my comfort level. And that's where I was saying you need to find something that suits your personality. I have just been working with 20 pip stop loss for quite some time, and sometimes I may put a 25 pip when I'm really confident. And let's say I wasn't able to get in over here. Like I don't like chasing price. So if I miss a trade, I miss a trade. I would not want to get into these candles up here. I would prefer to get in after this candle. So if you look at this pattern here, just this pattern, this is a morning star pattern. So it's red candle down, indecision candle, and then a nice bar up to the upside. So that's a morning star candle on its own. And then we have here price got rejected. So I want my stop loss to be below the lowest point here. So you can put it a few pips below that as your stop loss. So that's the general way of doing that. So I do look at weekly candles. And yes, I do the same type of analysis for weekly candles, which gives me more of a medium-term bias. So if you look here, this is still a short. So it's a short in the medium term, if you look at it here. So that's why, so one thing you could do is that I do pay attention to is where the price hits my downtrend line here in terms of the weekly. And that's an important place to pay attention to. And as you can see here, we are at about 1050. Yeah, about 1050. So I do pay attention to that as well. So I do look at that. And I also do look at the monthly. So in the monthly, we are still if you look at it, we're still in a downtrend. So my short-term bias on euro is to the upside. My medium term is to the downside, and my longer term, it's still to the downside. Does that make sense? So that's why I said when you look at the daily analysis, it's only for the following day. This is not for your overall longer term trend, just for the following day. It's just one way to pick out trades or get into trades and get some profits out of them. Actually, this indicator, it's a volume indicator. I use this Hawkeye indicator. This is called on balance volume, and the way I use it in combination with, I have another volume indicator here, which is on my other trade station. Let me see if I can open that. Let me close this out here. It's taking a long time. There we go. Oh, it's not coming up. Okay, here we go. So this I use this volume indicator, and I normally use it on a 5-minute chart. And the way I use it on a 5-minute chart, I can just go over this quickly. That's why I don't like using this one, because it's just so slow. Here, so this is what I do. So see how I was talking about price compression? This is an example of price compression, how the candle bodies were long, 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 and start getting smaller, smaller, smaller. And then it becomes, and then we have fully engulfing candle. So I was in this trade. I was looking to where to get out of the trade. I was trailing my stop in the highs here. Anyway, so I got out after this engulfing candle because that changed the bias. So in terms of using the volume indicator, I look to see there's a lot of selling volume coming in, the red volume, and then the volume, as the candles are compressing, the volume starts changing as well. We have more neutral volume coming in, and then we have so the volume it's reducing, and candles are compressing, and it's changing color. It's going from sell side to neutral. So that means tie that in with the price action. It's just a confirmation. I don't trade based on that. I just use this as confirmation. I'm a price action trader. I look at price action. That's my primary, like, support, resistance, price action. That's my primarily way of getting into in and out of trades. So I'm looking at this price action, and then I just use this as a confirmation. This price action with this confirmation, it's time to get out. So this one is on balance volume. You can just find in your MetaTrader. This shows me incrementally where the transactions are coming in. So when it's high up here, that means there's more orders coming into the bid side to the buy side. I like when so it's just, again, a confirmation thing. Sometimes it can keep you out of the trade, because let's say I am short side on something, and then I see that the on balance volume is sitting up high, which means the difference between the orders coming in, there are more incrementally more orders coming into the buy side than there are to the sell side. So I want to wait for it to kind of start going down a little bit to start getting into trades. So just a confirmation thing. All right, any other questions? The higher time frames, yes, I like the higher time frames, like daily highs and lows, and the previous day highs and lows. I find and weekly support and resistance areas, those are very important areas for price to react at. So I do keep those in mind. I do pay attention to those. All right, so that brings us to the end of our sorry, did I miss a question? Let me check. Robert. Yes, I trade the US session, and I have now started setting up alarms. because I find a lot of times these trades set up in the London session. So, and it's hard for me to trade the London session at this point. So I just trade the US session. But sometimes when, like, for example, it's a swing point, like we were looking at the swing point. Where's my Euro chart, Euro daily here? We're looking at the swing point right here. I would set alarms, like when we come to so this one here, I would set an alarm here. Once the price is coming into this level, I'm interested in buying, especially with the analysis that we just did. With a swing low, I would want to set an alarm, because this, I know off of this level, see, like I said, last time price came here, we had a swing of 620 pips. So this will be a very important level. So I would be interested in buying at this level. So I would set an alarm, even if it's set up in the London session. I want to see how price react at this level, combined with this candle and the price action. It's an important area to trade. All right, so that's it in the end. If you guys, this was just a free session. If you guys have any challenges that you're facing in your trading, and you just want to do a free session with me, just give me a call. There's no obligations. I can answer your questions. We can take half an hour, 45 minutes, and I can, answer your questions. So feel free to send me an email at raman@tradingwithvenus.com, and I can support you with that. Okay, perfect. So that brings us to the close of our call. Feel free to take advantage of this. It's a free strategy session. I can help you with, I have faced a lot of challenges in my trading, and I've gone through a lot of them. So I know what to do about them. So I can support you with that. If you want, send me an email. If not, I will see you on the next webinar. Okay, you guys enjoy the rest of your day.